How is your credit score impacted by your student loans?
So from what I see, student loans aren't treated any more differently than any other consumer debt, and they're not. The only difference and the hangup for everybody is bankruptcy. You're not going to discharge it, but not everybody's looking for that. You have a student loan, it's a debt. Here's the important thing, especially for people looking for a mortgage. They don't care about your total debt load for that student loan. What
Right.
they care about is what is your monthly payment? And this is where income driven repayments are so powerful. You have an affordable payment, it makes your debt to income ratio look affordable. You can go get a mortgage.
So
So,
Josh, let's slow this down for a second. Is one, when you're talking about the total amount of debt, specifically from a credit scoring perspective, your utilization rate, how much of the debt are you using? Student
right,
loans are like installment loans where the utilization rate doesn't matter, right? Like a mortgage loan. It's not like
correct.
a credit card where they're looking at that utilization. So
Exactly.
that's your point on the total amount of debt doesn't matter.
Correct.
When you're talking about income-based repayment, right? That is when someone makes a certain income that they can't afford their current student loan payments. And you can apply to change the payments downward based on the income, right?
Exactly. That is
Okay,
exactly it.
got it. And talk about income-based repayments. That does not impact your credit score at all, right?
It
If
doesn't, as long as you're making the payment.
that's the
No,
case. Yeah, so the size of the loan doesn't impact your credit score. The amount of your payments doesn't impact your credit score, and that it would be different than if it was like a car loan or something like that, because you can't lower the payments. So you
correct.
lower your payments on a student loan, it doesn't impact your credit score. And Josh, how low can you get your payments down on an income-based repayment?
Funny you should ask.
Yeah.
So on the current plans that are out there,
Huh?
you can have a payment as low as zero, and you're still making your payment on time.
So wait, so no, so in the banking world, if you're not making a payment, it doesn't count as an on-time payment. But that's not the case in student loans. I didn't know that.
That's correct. And let me be clear, you must be enrolled in an income plan. A
Okay.
forbearance doesn't count. That's a postponement of payment, and that can hurt your credit. But being on a $0 income payment,
Okay.
you're making your payment. It
Okay.
counts.
So an income-based repayment plan, whatever it is, helps your credit. It keeps it
Yeah.
keeps reporting. So let's talk about a forbearance. You said that hurts your credit. I didn't know that either.
Well, because you're not making your payment. You're
Right.
in an allowed postponement,
Right.
but you're not making a payment and they can see it. Now, imagine going to a car dealership to buy a car.
Hmm.
They pull your credit and they say, your student loan is in forbearance. Well, that's a problem for them because they don't know what your payment is. So, how do they figure out your debt to income ratio to figure out you can afford the car? You don't want that. They're also looking at it saying, well, if you have a forbearance, you must be going through
Right.
a financial struggle. Why do
Right.
I want to lend you car money?
So I understand that from a qualifying perspective, but have you seen that actually drop the credit score of forbearance?
I, I don't know that it's actually dropping the credit score. And mind you, the credit score I see is
Uh,
what the client brings to me. I'm not seeing what lenders
got you.
see.
Okay, got it. Okay. But that's interesting to know. And also with the forbearance, the interest on the loan accumulates, right? On a no payment income-based repayment. Does interest rate accumulate on that?
Interest is always accruing.
I
There's no way
got
to
it.
stop it.
Oh
But
my God.
again,
That is
your
crazy.
payment is zero. And remember, with the income plans, you're going to get forgiveness. So this
Right.
is really the government eating itself.
Okay. But
But
it's all allowed and it's in the books.
yes, it is.
Unbelievable. Okay. Another question I have for you on this is when you look at a credit report, let's just pretend someone has $60,000 in student loans
Yeah.
and they're taking out $7,000 every semester, yada, yada, yada. When you look at a credit report, sometimes, not always, but sometimes they show up as multiple line items, right?
Yes.
Is that because it's every time they take out, it shows up like that? Or why is it show like that?
So, okay, every year that someone takes out a new loan, it's a new loan.
Okay.
So you're going to have multiples. And it gets worse because you may have federal loans and private loans.
Hmm.
So you may show two new trade lines every year. You could walk
Yeah.
out of undergrad with 8 trade lines.
Right.
You can consolidate federal loans, which is not based on credit. By law, you're allowed to.
Mhm.
So you could crunch down those 4 undergraduate loans into one trade line. The
Got it.
balance is the same, but it's one trade line.
If for those that don't consolidate, the problem is, they still pay one payment. It's not like they're paying all these different payments. They miss
Mhm.
one payment, it shows up as 6, 8 late payments, 4 late payments, whatever
Yes.
it is.
Yes, it does.
It's a brutal mark on a credit
It
score.
is. It is.
Yeah.
But on the flip side, from a debt management perspective, if you're someone that's snowballing and paying off debt, you can pay off one loan at a time.
Yeah.
So there's pros and cons to both sides.
Got it. Josh Cohen, student loan lawyer. Thanks for being on.
Thank you.